All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Monday, everybody. Today is February 10th, 2025. And the top story this morning, man, I love to talk about stories like this. Gold has hit a new all-time high, broken above $2,900 an ounce for the very first time in history. And as much as I like to see that, as much as I like to see the stackers rewarded for their patience because I like the shiny, well, it's not all good news. It's not all good reasons why gold is going up so much. There's been a lot of talk recently about London and this arbitrage and the delay in getting metal out of London, and everybody's trying to bring the metal into the COMEX before the tariffs go into effect. And I'm sure that is driving a lot of this price action. But I don't know that we need to get so overtly mechanical about the inner workings of the gold market to really understand what's going on here. Inflation is coming back, and gold is rallying ahead of inflation. As we've often seen, gold does. Gold performs very well in anticipation of inflation. And so maybe what's going on with London and New York is playing a role here. Maybe Chinese buyers are playing a role here. I'm sure they are. Although I've been seeing a lot of stories recently about how Chinese investment buyers are buying more bullion, but that's being offset by people buying less jewelry because of the general economic malaise that has swept over China. The Chinese consumers just buying less gold jewelry now, and that is actually offsetting any growth in bullion demand. Again, I don't think we need to be all that technical, guys. Inflation's going to come back. Tariffs are inflationary. And what's the biggest story this morning in the financial press? I mean, gold making a new all-time high is the biggest story here because we like to talk about precious metals here. But the biggest story is tariffs once again. And tariffs are very inflationary. The Donald is out this morning. He's talking about tariffs on steel and aluminum, 25% across the board. Now, these tariffs are not targeted at China or Canada or Mexico. These are blanket tariffs that go on any and all steel coming into the country. And we import about 80% of our steel and aluminum in this country. This is a very protectionist measure. It's meant to support the faltering U.S. steel and aluminum industries. Well, that comes at a price. That means things that are made out of steel and aluminum, which is, pretty much everything has some steel and aluminum in it or in the packaging or somehow it has a steel or aluminum input cost. Well, those things are going to get more expensive. And so gold is rallying, anticipating higher inflation. And look, we saw anticipating higher inflation late last week. It didn't get a lot of traction because there was other stories going on. But on Friday, we got the University of Michigan's consumer inflation expectations, a huge jump in those from 3.3% all the way up to 4.3% in January. Consumers are seeing these stories about tariffs, and they're saying inflation is coming back. Now, generally, consumer sentiment is very positive right now. The consumer certainly opened up his wallet for the holiday season. He spent like crazy. It all went on the credit card or on buy now, pay later. But consumers are still voting their wallet and they're still spending an awful lot. That being said, they're expecting those prices to rise, and they're expecting them to rise big time. Guys, just a few months ago in November, inflation expectations year ahead were 2.6%. Now they're 4.3%. Can you see how people are expecting the higher inflation? Gold is rallying, anticipating that higher inflation. And well, inflation expectations have a way of being a self-fulfilling prophecy. So we probably are going to be seeing higher consumer prices in the not too distant future here. We also got some other stories going on this morning. McDonald's posted earnings, and there's been a lot of energy around McDonald's. They brought back the $5 value menu. And then there was an E. coli outbreak at McDonald's also. So, people didn't really know which way that one was going to break. It looks like it was a big revenue miss for McDonald's. Now, there was some interesting data within that. Overall foot traffic was up at McDonald's stores. So those $5 value menu, bringing that back, which was wildly popular with budget-conscious consumers, if you will, that was able to bring the people in. However, the people who came in, the increased foot traffic did not translate into higher same-store sales. They bought the $5 value meal, and that was it. They didn't impulse buy on other things. So the average ticket was way down. And so in particular, in North America, same-store sales were down, resulting in that revenue miss. Also, late in the third quarter, There was an E. coli outbreak that was traced back to the onion supplier for McDonald's quarter pounders. That took a chunk out of some same-store sales in particular states out west here in the U.S. All that being said, McDonald's stock is actually holding up pretty well this morning, all things considered. We've got TD Bank is dumping their stake in Schwab. They're raising up to $14 billion by selling their investment in Charles Schwab. Now, TD Bank, they're saying they're going to use about $8 billion of this money to buy back their shares. Keep in mind, guys, TD Bank was recently on the receiving end of the largest fine in history against any bank, $3.1 billion for their failure to implement KYC, anti-money laundering laws. Basically, they got caught laundering money for Mexican drug cartels and Asian drug cartels. And man, the feds they let them have it for that one. So TD Bank is pretty much persona non grata in the financial world for probably the next few years. There's all kinds of limitations have been placed on how big that bank is allowed to get and what they're allowed to do because of that. Very similar to what happened to Wells Fargo after their fake account scandals about, almost 10 years ago now. And even that, Wells Fargo has still barely just recovered now from what happened there. So I think TD Bank is still dead money for the foreseeable future. They're selling off assets, trying to batten down the hatches, anticipating that. And we got another story, interesting one to watch from OpenAI. They're building their own custom AI chips. Now, they're still going to take a while. We've heard about this from a couple of the competitors. Facebook's building their own chips. Google is. Amazon is. Amazon in their earnings, otherwise disappointing earnings report from Amazon, they mentioned Trainium is their new AI chip. So all of the Mag 7, we'll call OpenAI one of the Mag 7 because they fall under the Microsoft umbrella. They're all building their own chips. They're all gunning for NVIDIA, but none of them are there yet. NVIDIA is still pretty much the only game in town when it comes to these advanced GPUs. That moat is holding up for the time being. DeepSeek may change that, and all of these custom chips from other rivals may change that, but still a few months away at best for that one. So we got a lot going on this morning, guys. Why don't we shrink my big melon of a head and let's see what's happening in markets. By the way, my voice is doing a little bit better this morning, but you might be able to hear it. I still got a little bit of a frog in my throat, so we are going to go a little fast again this morning before I start cackling. Right now, though, the S&P 500 is up 36 points or 0.6% higher. Looks like things are doing okay in stocks this morning. The Dow is looking really good here, up 253 points or about 0.57% higher this morning. And the NASDAQ is up 185 points, leading the way higher by 0.86%. Stocks are up pretty much across the board this morning. Meanwhile, we have a slightly stronger dollar. The DXY is at 108.25. That's up by 21 basis points. And looking over at the bond market, we've got a mixed bag this morning. We got the 30-year Treasury at 4.697. That's up a half a point. The 10-year is down a half a point at 4.482. The 2 years down almost 1 point at 4.270. And the 1 month is up almost 1 point at 4.331. Not a lot of movement in the bond market this morning. Looking over at commodities, though, we have plenty of movement in commodities. We've got spot gold. I had to open my big mouth. There we are, $2,897 for spot gold. At one point this morning, we were as high as $2,911.13, but we're still up by about $36 or 1.3% higher. Spot silver is also up by about 13 cents here or 0.4% higher at $31.94. Even spot silver was over $32 at one point this morning. So metals are looking pretty good here. We've got copper is up about 1.4%. Platinum is up 0.98%. Palladium is up 2.2%. And WTI crude oil is up about 1.2% here, trading at 71.85 for March WTI futures. That's up by about 86 cents. Meanwhile, let's take a look at Bitcoin. It's a little bit higher this morning, although Bitcoin didn't do, well, it did a whole lot of nothing over the weekend. We're pretty much right back where we were on Friday, a little bit lower, $97,817 as priced on Coinbase. Still underneath that 50-day moving average shown here in blue and still under that all-important $100,000 technical level. Now, we did get a little bit of news this morning here. This is in Coindesk.com. Strategy resumes Bitcoin purchases and takes holding to 478,740 Bitcoin. Now, by the way, guys, if you didn't know, MicroStrategy, Michael Saylor's company, has rebranded themselves. They are the artist formerly known as MicroStrategy now. Now they just call themselves Strategy. All right, so silly rebrand. I don't know what getting rid of the micro means. Oh, now we're so big, we can't call ourselves micro anymore. Maybe, I don't know. But that's the new name of the company. They're buying Bitcoin again. The Tyson's Corner, Virginia company, formerly known as MicroStrategy, bought 7,633 Bitcoin for the week ended February 9th. Executive Chairman Michael Saylor posted on X, the average purchase price was $97,255 per Bitcoin, which raised the overall average purchase price to $65,033. So MicroStrategy or strategy or whatever you want to call them, maybe they'll just be at a G by next week. They're buying again. The infinite money glitch, it's still working for now until it doesn't. Keep your eye on this one, guys. And as always, every time I mention MicroStrategy, just be careful if you're playing around with leverage and crypto holdings. Remember, sooner or later, crypto winter will return. We're probably about 8 months away from that at the most at this point. Let's take a look at this gold chart, though. I like the look of this one here, $2,899, just below $2,900 here. It looks like 3,000 may be in the cards eventually here, probably still a few weeks off. But gold has had one heck of a run. I mean, this is going all the way back to the beginning of December. We've pretty much been up and to the right. It's done pretty well since Election Day. And again, the more we talk about tariffs, the more we're going to talk about inflation, the more that should drive gold prices higher here. And let's just take a look at some of the other things that might be driving gold. This is on Friday. We got this one, United States, Michigan, 1 year inflation expectations. And this was a pretty big jump here. The year ahead inflation expectations in the United States climbed to 4.3% in February of 2025. That is the steepest since November of 2023, accelerating from January's 3.3%, according to the preliminary estimate from the University of Michigan Consumer Survey. In the meantime, the 5-year outlook rose to 3.3% in February. That's the highest since May of 2008, up from 3.2% in the previous month. Now, guys, that's an important one there, that 5-year expectation. That's the chart I'm showing right here is the 1 year. But the 5-year inflation expectation hitting 3.3%, that is even higher than it went in 2022. So 5-year inflation expectations haven't been this high since before the GFC. People are expecting these tariffs to result in higher prices. And you can see here, here's November. We bottomed out at 2.6%. A thing happened in November. Mr. Orange was elected and he started talking about tariffs. And now inflation expectations start rising dramatically. Guys, I'm beginning to think these two things might be related. And you better believe that's playing a role in this meteoric rise in gold that we're seeing as well. And this is the story in particular this morning that is driving the inflation narrative. Trump plans to impose 25% tariffs on steel and aluminum imports. President Donald Trump plans to impose 25% tariffs on all imports of steel and aluminum into the U.S., broadening his trade restrictions to some of the country's top trading partners and seeking to protect domestic industries that helped him win battleground states last year. Speaking to reporters Sunday on Air Force One, Trump said the tariffs would apply to imports of both metals from all countries, including major suppliers Mexico and Canada. He didn't specify when the duties would take effect. The president also said he would announce reciprocal tariffs this week on countries that tax U.S. imports. Those would be enacted almost immediately after an announcement, Trump said, without providing further detail. Now, that's a big wild card right there, guys, the reciprocal tariffs, because there's a lot of countries that have always had tariffs on things coming in from the United States. And so far, all the tariff talk has been focused on Canada and Mexico and China. Now, reciprocal tariffs is automatically raising tariffs on anybody who's got tariffs on us. So that could be a pretty big deal. He's talking about doing this almost immediately. Is he spouting off? Is he just, legislating, or is he running the executive branch just by the seat of his pants as he's prone to do? Maybe, or maybe this is actually going to be policy very soon, but keep an eye on those reciprocal tariffs as well. Now, back on steel and aluminum, the U.S. relies on aluminum imports from countries including Canada, the UAE, and Mexico to meet the vast majority of demand. Net imports added up to 80% in 2023, according to Morgan Stanley, Steel imports account for a smaller portion of overall consumption, but are vital for sectors leaning on specialty grades, including aerospace, auto manufacturing, and energy, from wind developers to oil drillers. So these steel and what they're saying here, guys, look, this touches a lot of industries. It's not just going to be Coke cans. It's not just going to be planes. This is going to hit a lot of things. So this is going to be very inflationary. And just a reminder, guys, tariffs are paid ultimately by the importers, which means those costs are passed directly onto the consumers. So this is a tax on American consumers here. This will be inflationary. Now, we have some companies are reacting very positively to this morning, in particular, U.S. steel producers. Companies like Cleveland-Cliffs, ticker CLF, they're up almost 8% this morning, trading at $10.84. That's up by about 80 cents. Another big U.S. steel producer is Nucor. They're up a little less, 6% higher here, trading at $138. That's up by about $7.75 this morning. So some U.S. steel producers are doing pretty well. Now let's talk about this one. We've got McDonald's revenue disappoints as U.S. customers spend less at its restaurants. And there's been a lot of energy around McDonald's, and it looks like not all good here. McDonald's on Monday reported disappointing quarterly revenue, dragged down by weaker than expected sales at its U.S. restaurants following an E. coli outbreak just weeks into the quarter. Shares of the company fell less than 1% in pre-market trading. They were actually positive the last time I looked. Let's see. The fast food giant reported fourth quarter net income of $2.02 billion, or $2.80 a share. That's down from about $2.80 a share a year earlier. Excluding gains tied to the sale of its South Korean business, transaction costs for buying its Israeli franchises and other items, McDonald's earned $2.83 a share. Excuse me. The company's overall same-store sales growth of 0.4% outperformed Wall Street's expectations of same-store sales declines of 1%, but McDonald's U.S. business reported a steeper than expected drop in same-store sales. Same-store sales at the company's domestic restaurants fell 1.4% in the quarter. Wall Street was projecting same-store sales declines of 0.6%. So this was below expectations for same-store sales. That's pretty rough number there, down 1.4%. Now, McDonald's said traffic was actually slightly positive, but customers spent less than usual during the quarter. Over the summer, the chain rolled out a $5 combo meal to bring back price-conscious diners and reverse sluggish sales. The strategy worked, helping McDonald's U.S. same-store sales tick up in the third quarter. However, analysts have warned that value meals only work if customers also add menu items that aren't discounted to their orders. The biggest hit to McDonald's U.S. sales came in late October when the CDC linked a fatal E. coli outbreak to its quarter pounder burgers. McDonald's switched suppliers for its slivered onions, the ingredient fingered as the likely culprit for the outbreak. In early December, the CDC declared the outbreak officially over. However, in the days following the news of the outbreak, traffic to McDonald's U.S. restaurants fell steeply, particularly in the states affected. So McDonald's, all things considered, they're doing really well this morning. They're actually up 2.7% now. So it looks like maybe some of this decline was expected, maybe not that big of a decline. The E. coli certainly took a chunk out of sales. It looks like that's going to be a one-off. It's not going to affect future quarters. And again, the $5 value meal for the moment seems to be pretty popular with consumers. So McDonald's is up about $8 this morning, 2.8% higher, trading at $302.58. Now let's talk about what's going on at TD Bank this morning. This one was kind of interesting. TD seeks to raise $14 billion in Schwab stake exit. They are raising cash and batten down the hatches at TD Bank here. Toronto Dominion Bank expects to raise about $14 billion through the sale of its entire stake in Charles Schwab Corp as part of a corporate overhaul in the wake of its historic U.S. money laundering settlement. TD will sell 184.7 million shares of Schwab's common stock, representing 10.1% economic ownership, it said in a statement on Monday. Schwab has agreed to buy back 1.5 billion of its shares from TD. The rest will be sold on the open market. So this is going to put some downward pressure on Schwab shares here. Canada's second largest bank reached a settlement in October with the U.S. Department of Justice and bank regulators over its failure to catch money laundering at several American branches. TD agreed to pay almost $3.1 billion in fines and other penalties, and last month said it was accelerating its CEO transition process, tapping Raymond Chun to step into the role 2 months earlier than initially planned. TD expects to generate about $14 billion in proceeds through the share sale, Chun told bank employees in an internal memo Monday morning seen by Bloomberg. In just under 5 years, this investment has generated a very strong return, and we believe this is the right time to reallocate the capital, he said in the memo. The Canadian lender acquired its ownership stake in 2020 as part of a transaction to sell its interest in online brokerage TD Ameritrade. It sold 40.5 million Schwab shares back in August and trimmed its previous 12.3% stake to raise about $2.5 billion to help cover the cost of the fines and the money laundering probe. Toronto Dominion Bank said its plans to use 8 billion Canadian dollars of the proceeds to repurchase its stock and will invest the balance of the proceeds in the company's businesses. So just something that I would remind people, I hear this criticism of Bitcoin all the time, that Bitcoin gets used for money laundering and gets used by criminals. Yes, that is true. Bitcoin does get used by criminals. But yeah, so do dollars and so do banks. And in particular, TD Bank, the largest fine ever, $3.1 billion for laundering money for the cartel. Just throwing that one out there, all you people who are like, oh my God, there's crime in Bitcoin. Keep in mind, guys, there's crime everywhere, in particular in banks. So TD Bank, guys, this one, in my opinion, is going to be dead money for a while. I think they're going to have to just kind of sit tight and wait this thing out. There's part of this settlement. There's all kind of limits on how much in assets they're allowed to manage. It's dead money like Wells Fargo has been for the last couple of years. All right, last one before we roll here. OpenAI set to finalize first custom chip design this year. Keep in mind, guys, NVIDIA's moat right now, it's getting thinner and thinner. And OpenAI has been one of their big customers, and even they are looking to build their own chips here. This space is becoming heavily commoditized. OpenAI is pushing ahead on its plans to reduce its reliance on NVIDIA for its chip supply by developing its first generation of in-house artificial intelligence silicon. The ChatGPT maker is finalizing the design for its first in-house chip in the next few months and plans to send it for fabrication at Taiwan Semiconductor, sources told Reuters. The process of sending a first design through a chip factory is called taping out. Now, the update shows that OpenAI is on track to meet its ambitious goal of mass production at TSMC in 2026. A typical tape out costs tens of millions of dollars and will take roughly 6 months to produce a finished chip unless OpenAI pays substantially more for expedited manufacturing. There is no guarantee the silicon will function on the first tape out, and a failure would require the company to diagnose the problem and repeat the tape out step. Look, it looks like this is still months away. They're saying here mass production by 2026, assuming they hit their targets. This is not something that is going to send NVIDIA sharply lower in the short term, but it does show that most of NVIDIA's biggest customers are all trying very hard to become NVIDIA's biggest competitors. Sooner or later, one of them is going to succeed. OpenAI is no exception. We've got Amazon doing the same thing. We've got Google doing the same thing. Meta is doing the same thing. They're all gunning for NVIDIA. Sooner or later, one of them's going to hit. And I just want to say thank you very much to Armando Reyes, who says the CFR, that's the Council of Foreign Relations, posted on their Foreign Affairs X account saying Trump will come to an end, as well as the MAGA movement, dark forces. Look, guys, Trump and Elon and the Doge, they are stirring up a hornet's nest. They're digging into all of the slush funds and all the money that's been sprinkled around for projects that I'm sure add lots of value, like Alphabet-inspired comic strips in Bolivia. I'll just think of all the benefit to the American taxpayer that provided. And look, these people are defending themselves. The grift machine is in self-defense mode, and so they're going to be pushing back. Look, which side do you want to be on? You want to be on the side that is defending this ridiculous waste of money that is crippling the country and leading to this massive expansion in the wealth gap? Or do you want to be on the side that's trying to cut the spending? Figure it out. There's going to be plenty more of this. Let's just put it that way. There's going to be plenty more of this BS. The more they dig into where this federal money is going, the more crap they're going to find, the more petty the arguments are going to get, the more Chicken Little, sky is falling, oh my God, we can't let these people look at this information. What are they going to do with this? You're right. The only logical choice is to dump another $5 trillion then, right? Oh, no, you can't. Well, sooner or later, they're going to have to cut the spending. So I'd rather be on the side that wants to cut the spending. That's my take on that. Look, the Council of Foreign Affairs and what they post on X, let them rant. That's all I say. That's all. Thank you very much, Armando Reyes, sir, for supporting the channel. And thank you, Stephen Mine King, who says, was MicroStrategy funded by U.S. aid? I'm going to go out on a limb and say no, MicroStrategy was not funded by U.S. aid. But look, U.S. aid funded a lot of shit. So let's not rule it out. But let's put that one in the category of unlikely, highly unlikely. Thank you very much, Stephen, sir. Armando's back says, Larry Burkett wrote a book called The Illuminati. And in the book, they implemented a system called DataNet. Auditing the Fed and Pentagon will start it. I haven't read that book, Armando, so I can't comment on that one, but I did read a lot about auditing the Fed over the week. Now, again, it's just Elon tweeting, hey, this is a good idea. Let's audit the Fed. Doesn't mean it's going to happen. But hey, I wouldn't object. I mean, the Federal Reserve throws around trillions of dollars on a whim without any approval, without any oversight. They get hauled in front of Congress once or twice a year to explain themselves, but that's about it. I wouldn't mind an audit of the Fed, and I shudder to think of what they might uncover if they ever did that. But yeah, audit the Fed. Don't threaten me with a good time. Thank you, Armando. Appreciate the super chat, sir. Bobby C says, Jack, we got it. Tariffs are inflationary. Yep. Shall I elaborate further? Or I think we got that one. Yes, tariffs are very inflationary, and well, better own some gold. That's all I'm saying. I like the shiny for many reasons. But yeah, sure, tariffs is inflationary is another reason. I like the shiny. Thanks again, Bobby C. And thank you, Zeeble Fritz, for being a Melonhead member for 8 months. He says, Trump cancels penny production, inflation warning. I read mixed things about that. I read that he wants to cancel penny production, but then the U.S. Mint says it requires an act of Congress to cancel penny production. I have mixed feelings on canceling penny production. Let's admit it, guys. The penny is stupid at this point. It's worthless. It costs more to make a penny than the penny is worth. So I think we can all agree a penny is a waste of money. But at the same time, it feels like a loss. Doesn't it feel like surrender to inflation if we just admit, oh, well, like we're just not going to deal with pennies anymore? It feels like down that road lies that 1 trillion. What was the country with that famous 1 trillion note? Was it Nigeria? Has the $1 trillion banknote? I feel like if we get rid of the penny, we've taken a step down that road. And well, let's be honest, we're already a few steps down that road, aren't we? So one more isn't going to kill us. So I guess in the grand scheme of things, yeah, we probably should get rid of the pennies. Look, most of the pennies are out of circulation anyway. Everybody's got a jar of pennies sitting at their house. It's stranded money. It's never going to get spent. It's just going to sit there in a jar getting bigger until one day, I don't know, you melt it down for copper or zinc or whatever. So I guess it makes sense to get rid of the penny. It just feels like a loss. That's all. Feels like an L, Zeeble Fritz. Thank you for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. That's right. Tariffs are inflationary. I said it one more time. Why not? Thank you guys for the super chats and supporting the channel. Thank you to my magnanimous Melonheads on Patreon and YouTube for everything you guys do for the channel. Links down below, should you feel so inclined. Don't forget that like button and the subscribe button on the way out. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.